You're caught between two worlds. Crypto moves fast, win big, or lose everything overnight. Stocks, slower, safer, but painfully boring. So where should your money really go? And who's more insane, crypto junkies or Wall Street veterans? Stick around. By the end of this video, you'll know exactly which game you're meant to play. Let's start with the stock market. Imagine a stock trader. They're glued to their computer, not just browsing casually, but diving deep into the world of financial news. They're reading quarterly earnings reports, analyzing company fundamentals, and scanning charts that look like they belong in a NASA lab. For example, let's say they're watching Apple, carefully studying every move the company makes. They want to know how Tim Cook plans to expand into new markets, how they're handling competition from Android, and whether their dividends are about to increase. It's all about precision, strategy, and research. It's like playing chess, and every move is calculated with the utmost care. The stock market is a world of slow, steady growth. On the plus side, it's time-tested, and if you're strategic, the long-term rewards can be significant. It's a relatively stable environment where you can carefully pick and choose investments, giving you time to make educated decisions. However, there's also a downside. The pace is slow. You won't see massive gains overnight. And while it's safer in many respects, it doesn't always offer the same thrill or potential for quick rewards that some traders crave. In fact, the stock market can often feel like a marathon where the best results take years to materialize. While the stock market is historically stable, past performance does not guarantee future results. But for someone looking to build wealth over time, stocks can offer a sense of stability and control if you're willing to put in the work. The stock market rewards patience, discipline, and long-term strategy. But there's one thing I want to ask. Can the slow and steady approach truly be the best fit for you? Keep that thought as we move on to the next option. Now, let's talk about crypto. Imagine a crypto trader. They're not just analyzing earnings reports or studying company fundamentals. Instead, they're diving headfirst into a new token that's taking off like wildfire. They're following social media influencers, jumping into Telegram and Discord groups, and chasing the next big thing. Crypto is a world where rapid action and trend chasing rule the day. One moment, you could be sitting on a 200% gain, and the next, your portfolio could get completely wiped out in an instant. However, this doesn't mean that crypto is all about speculation. The real edge comes when you have the right knowledge. By studying the market, doing proper research, and carrying out solid data-driven analysis, you can increase your chances of making informed decisions. Crypto is volatile, yes, but it's also full of opportunity for those who can weather the storms and capitalize on them. And let's not forget, we've seen Bitcoin rise from under $1,000 to nearly $20,000 in 2017. It was a massive roller coaster ride, but for those who held on and understood the trends, it became a life-changing investment. The main advantage of crypto is its potential for rapid rewards. The downside, the volatility, and risk are immense. But if you approach it with the right mindset and the right tools, you can manage that risk. While crypto offers opportunities for high returns, it also comes with significant risks. Similarly, while stocks are considered more stable, they are not risk-free. So, while crypto might seem like a crazy gamble, with the right knowledge, it's anything but. It's about seizing those fleeting opportunities, if you're prepared to handle the risks. The kicker: how do you know you're prepared? Stick with me, because we're going to explore that in the next section. So, who's crazier, stock traders or crypto traders? The truth is, both markets have their own brand of crazy. Stock traders, their crazy comes from the constant analysis, the stress of trying to time the market, and the pressure to outperform. Crypto traders, their crazy is all about the volatility, the constant ups and downs, the unpredictability of the market, and the fear of missing out on the next big thing. Both markets carry their own risks, and neither guarantees profits. So, where should a beginner start? Should you go for stocks, where things are more predictable and structured? Or should you dive into crypto, where the excitement is palpable, but the risks are high? The answer depends on you and your risk tolerance. If you're someone who values stability and is ready to invest in a long-term strategy, stocks could be worth researching. On the flip side, if you're someone who enjoys fast-paced action and is willing to take calculated risks, crypto might be an area to explore. So, what's more exciting to you, the slow, structured growth of stocks or the fast, volatile potential of crypto? The choice is yours.